I think the more important way to answer your question is not talk about some of the general stuff or inflation or even against the stock market, is to admire how it's performed in an environment wasn't as conducive as it is now. So that would argue that I still think it has to go a lot higher over time, but I think a reasonable target of 4,000. And remember, when you're in all time highs, other than a psychological number, there's no real resistance. So, pick 4,000. Yeah, that'll be a round number and so forth. And, Wall Street has treated gold like kryptonite. I think half of 1% of portfolios are assumed to have some exposure to gold. Can you imagine if people just went to 1 or 2%? It's still a very, very viable market for the long term.
Gold's steady rise is beginning to look less like a gain and more like a reset of the world's financial order, with prices just below $3,600 an ounce. Veteran market expert Peter Grandich told Commodity Culture that the move is not only the right thing to do, but it may also be just the beginning. The famous Grandich quit standard stocks and bonds almost 5 years ago to focus only on physical gold. For him, the metal's rise proves a point he has been making for decades. Gold is the best money there is, and now is the time for it to come back. Grandich finds an interesting irony. Since the turn of the century, gold has done better than both stocks and bonds, but most North American buyers still don't have enough gold in their portfolios. He says that in China, families buy gold on the weekends in the same way that people in the US buy things with credit cards. Financial advisors in the West, many of whom are too young to remember previous cycles, still say that stocks and bonds are the only good long-term assets. Grandich thinks that this difference between how things seem and how they really are is part of what makes the gold trade so strong. In the early 1980s, an unknown man named Robert Prester shocked Wall Street by predicting that the Dow would skyrocket to $3,600, which was seen as crazy at the time. The experienced expert also made a similar point. History, of course, showed him to be wrong, and Grandich sees the same lack of belief in the gold market today. Some people may already think the price is too high, but he makes the case for gold's basics. The effects of central bank growth, de-dollarization, and losing faith in paper currencies are worse than ever. His base case now is that gold will be worth $4,000. It could go up much more once common capital starts to flow into the sector. Here are some clips from Peter's conversation. Before we go any further, please subscribe to our channel and click the bell button to get updates when they happen. Have fun with the movie. Well, someone who almost 5 years ago chose to sell all of his stocks and bonds and buy gold. That person then told my financial planning group, and out of all our clients, only one paid attention. There are still many people who are not in gold at all. For a market that has actually done better than stocks and bonds since the turn of the century, I think that's one of the most important points that isn't talked about. While I take a short break, Jesse, think about this. Some people at the bank will take it the way it's meant to be taken. They need not. It's a big picture. Before I start, I want to say that after 41 years in the business, almost two-thirds of the financial planners who work today were either not born yet or were still in diapers when I started. They've only been there since the beginning of the millennium. Still, if you ask almost all of them what the best purchases have been, they'll say stocks, with bonds coming in a close second. They don't talk about gold at all, but gold did better than both of them. But as you said, there is still not a lot of interest in North America here, even though we've reached 3,600. Now let's look at other parts of the world. For example, Jesse, I know you already know this, but in China, people go shopping on the weekends to buy gold. We're shopping with borrowed money to get things we don't need. I just think about the base, even though it costs more now. This is also very important. Some people might not agree with this, but I believe it should be heard. Most people thought stocks were dead when I started working in the business in the early 1980s. The Dow never went above or below 700 points for 13 years. The famous front page of Business Week even said that stocks are dead. Wall Street was very pessimistic, and a young man from Gainesville, Georgia, called Robert Prechter Jr., who no one knew much about, said that the Dow was going to $3,600. He had a philosophy and a way of looking at the market that no one really knew about. Elliott wave theory, he was just charged with calling him every name in the book. He became well known when the market took off. Then he and I both called about the crash in 1987. People thought it was impossible for it to go up to $3,600, let alone $36,000 and more a few decades later. I still feel that way about gold right now. It's not right for people, especially those who have been bullish and are making money from it. Yes, it's great. It gives you every reason, but how could it get much higher? It's not possible. That's the way you have to think. It should be able to. I would even say it's not cheap anymore. Someone who bought it for $1,300 saw that the price tripled, but the main reason to buy gold has never been stronger. We used to have control by central banks that got rid of it. They are now the biggest buyers. We didn't have any culture in Asia, especially China, that thought it was money. They see it as money, and the BRICS, of course. One of the main things that made me think that gold would go up was the idea that countries would move their economies away from the US and their currency, which is called de-dollarization. To answer your question more directly, I believe it is best not to talk about general issues, inflation, or even being against the stock market, is to admire how well it was done when conditions weren't as good as they are now. That makes my case for why I still think it needs to go up a lot over time. But I believe 4,000 is a fair goal. Finally, keep in mind that there is no real pushback when you're at an all-time high. Pick the number 4,000. That will be a round number, of course. And you should know that gold has been treated very badly by Wall Street. It's thought that about half or 1% of investments have some gold in them. What would happen if people only went to 1% or 2% for the long term? It's still a very, very good market. Yes, you're right. I did a 180 and it made sense to treat it like gold was more important. But when it fell below 30 earlier this year, I looked at the main point and saw that it had never been stronger in the 41 years I've been involved. I turned into a silver buck. I also said it was likely to be ahead of gold for a long time. I believe that's what's going on here. I believe you make a very good point. The Hunt brothers once went to 50, so to get back to that, you're right. As prices rise, it will almost certainly need to trade at 200. So what I've said, which probably makes me a total silver bug, is that the price of silver in the triple digits is a real goal. To begin with, it's not that different from a double from here. It sounds like a lot because the price was in the single digits for a long time. I think it will keep going up though, because gold and the stock market are both going up. I got to this a few weeks ago. I made a big change. I wasn't in the camp for when the stock market crashed. In January, I told our clients that I thought the stock market would stay the same or go up or down. I told people to stay away from US stocks and invest in world funds instead. I enjoy the Chinese market a lot, but things a few weeks ago made it clear that we were very open to a hard fall or even a crash. And that has been going up against gold, silver, and cryptocurrency. So a slowing of the bull trend or a real drop, as long as it's not a complete crash, could only help gold and silver. Jesse, do you know how I know that? In 2013, I stopped taking on work in the mining and metals business. I put some money back in 5 years ago when I was getting very excited about gold, mining stocks, and other things. But people I haven't heard from in 10 or 20 years are calling me again in the last few weeks. If gold's rise is getting people's attention, silver's comeback is really shining. As prices rise above $40 and continue to go up, the metal finally breaks through a ceiling that had been holding it back for decades. In the past, Peter Grandich thought of silver as the kissing your sister trade. Now he sees it as the most important thing in this bull cycle. When you take inflation into account, the high point of silver in 1980, around $50, would be closer to $200 today. This means that the idea of silver going up to $10 an ounce is much more likely than most buyers are willing to admit. Besides being used as money, silver is also in high demand in important fields like solar energy, electric cars, and advanced electronics. This strong demand from these industries supports silver's price rise. Gold and silver miners have also been doing very well, with gains that are on par with the metals themselves. Sector ETFs like GDX and SIL have grown by more than 80% this year, far outperforming the S&P 500 and NASDAQ. Even though those returns are huge, there isn't much coverage in the major media. It's almost like Wall Street still won't admit there is a bull market that doesn't fit its story. Grandich says that this lack of faith has made the door wide open for investors who see the chance early. He thinks that if big banks and financial advisors start putting some of their money back into precious metals after ignoring them for a long time, it could start a second, even stronger leg up. This would make today's overlooked rally into one of the most important investment stories of the decade. Well, a lot of the major U.S. financial media is connected to people who work in the financial services industry. They won't write things down, so don't follow along. You should know that they're ads. So I don't think they'll write nice things about that, because in the time I've been in the business, gold and silver have been treated like they were useless. That won't change until the public says, listen, I'm listening, or I have this neighbor who's killing it, and so on. That's when I think people will pay attention. There are two types of stocks, mining stocks and development stocks. I will talk about both of them. As I already said, when I sold some of my physical gold at $3,500 in the beginning of the year to buy shares in the major gold producers, they did much better than the performance of the physical gold. They are now many quarters ahead of just unbelievable, legitimate printing money through free cash flow. And what will happen to them and keep that going is that the stock market will eventually slow down. We're seeing a lot of companies now. They can always say they beat the low-end earnings predictions if they don't meet them. These money managers who handle a wide range of investments will learn about these mining companies. Take a look at Newmont Mining. As you and I record this, it might be the best performing stock in the S&P 500 today. If Palantir gets hit hard enough and Newmont is going up, it's number 2 right now. That means it's doing better than 498 other small cap stocks. Still, I can tell you that half of people's portfolios, or 1%, have Newmont mines in them. This means that people still want to buy mining shares, so they should do well. However, where I went is the riskiest and most uncertain part of it. Remember that Wall Street made up the word speculating, so don't call it what it is, which is gaming. We need to be ready, both mentally and financially, to lose some of our cash. On the other hand, we'll get the most out of the junior college level. In some cases, we're already seeing that. And the reason is that the world has shrunk so much that companies can go there without taking too many risks to try to find the metals that are so badly needed right now. Also, a lot of money hasn't gone into that business to look for these things. Remember that you just drilled in Iraq. Even if you hit it tomorrow, it doesn't work that way. It takes years of research. No matter where in the world you are, it will probably be at least 10 to 15 years before it comes out and pours the first metal. Once everyone understands that and how we're rushing, someone made a good point to me the other day. It was Sam Lee, one of the owners of North Helicopter and Gold, which is actually the biggest stock they have. He is just in South Korea and Japan on a business trip for Canada. That's a good point. They're famous around the world for making a lot of the things we need, like electronics, tools, and so on. But all the metals they need come from outside their country. Not really, because they don't have any of their own. So now we have it. The world is rushing to get important minerals. Not a lot of money has been put into them. I believe that for some time that will turn aging companies into darlings, and the big ones, because this stock has made that currency so strong, they are not going to try to grow from scratch. Good mines are still being sold for as little as $20 an ounce, so they're just going to go out and buy. We're being called at $3,600 and going up. I'm sorry for the long answer, but I don't think the mining shares and expiry stocks have had their day in the sun yet. And the lesson I'm still learning about money, even though I'm 42 years old, is that control is always the key. Actually, projects are great, but even a great project can fail if the people in charge are bad. That was a hard lesson I learned there. So the first thing that needs to be thought about is, sorry, but past success leads to future success. Very hard to give someone. I know there are young people who may do well and all, but I believe you need to be with a well-known group. This is the other hard thing I learned here. You need to see them with real hard-earned money. Major owners. It looks like my two biggest investments have cornerstone owners and a board that own between 25 and 50% of all the shares, and they paid for them. There shouldn't be any cheap choices or anything. How they came back, compared to this other business where management didn't have much power, they act and think very differently.
And putting their own money where their mouth is very important.
The third thing that's important is also where they're looking. We live in a much smaller world now. You and I could have gone around the world and said, yeah, we can go there, Jesse, if we were at a gold show. I used to talk to them all the time when I was 25 years old. Not any longer. In fact, almost everything I own, except for one case, has something to do with North America. You still can't go anywhere in North America. Let's not even talk about California. That's not a place you should ever visit. But I do believe that management begins with management. I know it's tough because this is a small business. A few names are always thrown around. People think they're pros because they're always out there. They got paid a lot. You wouldn't believe how much the so-called big name experts lost over time. They have the killer sickness that I gave away 20 years ago and no longer have for Fonzie. And that's to be able to say I was wrong. Please keep in mind that it is common for junior resource stocks to fail. It looks like I have 10 junior resource stocks out there right now. At least half of them in 2 to 5 years will have either reached zero or not even come close to what we had hoped for. Half of the people who buy him and hold on to them in 2 to 5 years will say, I hate that guy Grandich, just like they do now. But in the end, you have to understand that failure is normal in this business too. So you need to have a broad portfolio or at least bet big like I do on a team that I think will win. They put up a lot of their own money, planned ahead. Grandich imagines a world in which gold slowly but surely takes back its historical role as money, starting in the BRICS economic bloc and spreading to other places. Countries like China, Russia, and India have been quietly building up their reserves. They aren't doing this out of pride or nostalgia, but as a safety net in case their banking systems fail. He thinks that collecting gold is more than just a safety net, it's the start of a second system of money, one that could keep trade and payments stable without the US dollar. For countries that have been limited by the dollar for a long time, gold offers a neutral and tried and true option. It is a base that can't be printed at will or used as a weapon through sanctions. At the same time, Grandich says that the US dollar is clearly breaking down, even though it is still the most important coin in the world. For just 3 years, gold has taken away about half of the value of the dollar. For investors paying close attention, that isn't just a strange thing on the chart, it's a strong sign of where trust is going. He says that the rise of gold isn't just a response to unstable politics or investor fear, it's also a reflection of what money means in the 21st century. As a result, record purchases are being made by central banks, and private investors are seeing rare metals as more than just a way to save money, but an escape hatch for bad fiscal management and debt bubbles that can't be stopped. The message from Grandich is strong. The world isn't going back to gold because people miss it. That's where it has to be. And the repricing we're seeing now is just the start of that reckoning. How do you think the prices of gold and silver will change in the next few months? If you think this video is helpful, please share your thoughts on the expert's analysis in the part below. If you want to know about our newest videos, please help us and turn on notifications. We'll see you next time. Thanks for seeing.